Something incredible happened in Times Square this week. Giant digital billboards painted the entire intersection blue. It was not just an advertisement. It was a statement. But while everyone is distracted by the flashiness of Bitwise adding SUI to their 10 crypto index, or Grayscale filing for a spot ETF, the real story is happening on the weekly chart right now. We are staring at a technical setup that has historically preceded violent moves to the upside. Most people are ignoring this because the price action feels slow, floating around $1.60. But I'm looking at a convergence of institutional money flow and a massive continuation pattern that suggests we are essentially coiling for a spring. By the end of this video, you are going to understand exactly why I believe the current boredom is a trap for the impatient. I'm going to break down the specific price levels I'm watching, where I'm accumulating, and the exact point where my bullish thesis would be invalidated. Let us get the lay of the land. Right now, SUI is trading roughly between $1.60 and $1.70. It has been chopping around here, frustrating traders who want instant gratification. Sentiment is a weird mix of exhaustion and hidden bullishness. You have retail traders bored because it is not pumping 10% a day, but then you look at the institutional side, and the interest is skyrocketing. This video matters today because we are sitting at a decision point. We are testing the patience of the market right before what looks like a major liquidity injection. We often see these lull periods right before a trend defines itself. The price action over the last 2 to 4 weeks has been essentially consolidating here in the lows. But there is something in the fundamental data, specifically regarding stablecoin flows, that completely changes how you should view this stagnation. It suggests this is not a loss of interest, it is a transfer of ownership. And the catalyst for the next leg up might already be signed and sealed. Let us look at the fundamental engine driving this train. The narrative shifting SUI from just another layer 1 to a legitimate institutional asset is accelerating fast. First, look at the regulatory landscape. We have Grayscale officially filing to launch a spot SUI ETF. That is, the S1 form you can see right on the SEC website. When the world's largest crypto asset manager makes a move like this, it is not a guess. It is a calculated bet on future demand. And they are not alone. We saw Bitwise include SUI in their BITW 10 crypto index ETF. That is why Times Square was painted blue. This means passive capital is now forced to buy SUI just to maintain the index weighting. That is structural buying pressure that does not care about market sentiment. But for the aggressive traders, we also saw the approval of the first ever 2x leveraged SUI ETF, live on NASDAQ. This is a first for SUI in public markets, offering amplified, regulated exposure. It signals maturity. Wall Street does not build derivatives for ghost chains. Now move away from the financial engineering and look at the on-chain reality. I saw a chart recently showing stablecoin transfer volume. On December 6th, SUI processed $3.6 billion in stablecoin volume. That puts it in the top 3, right behind Ethereum and Solana. When you see stablecoins flooding in, that is liquidity preparing to be deployed. We also have real-world utility kicking in. The partnership with Carrier One is now backed by Ericsson. We are talking about a decentralized mobile network built on SUI, leveraging Ericsson's global reach. This is what built for real utility looks like. It is not just about meme coins, it is infrastructure. And finally, the DeFi ecosystem is maturing. With XBTC now plugged into SUI DeFi, you can use Bitcoin on protocols like Navi, Bluefin, and Scallop. This brings the deep liquidity of Bitcoin directly into the SUI ecosystem. The top 20 projects on SUI now have a combined TVL of $1.2 billion. Money is sticky here. The staking ratio is sitting around 74%. That means almost 3/4 of the supply is locked up, reducing sell pressure significantly. Now let us switch gears to the charts, because this is where the opportunity becomes actionable. I'm looking at SUI against the dollar on the weekly time frame. This macro view filters out the daily noise and shows us the real structure. If you look at the chart, you will see 3 orange dotted lines forming a massive pattern. We have an ascending trendline support coming all the way from the October 2023 lows. Every time the price touches this line, buyers step in. Simultaneously, we have been in a descending channel since the highs of 2024. This convergence creates a massive pennant or a bullish flag structure. In my opinion, this looks like a textbook bullish continuation pattern. We are currently sitting right on that lower support trendline. This is the moment of truth. Let us talk about the moving averages. Currently, the price is below the 10 and 21 weekly EMAs. Those are the blue lines on my chart. It is also below the 55 EMA, the purple line, and the 100 EMA, the yellow line. Now, typically, being below all these averages is bearish. However, notice how they are compressing. When price action compresses like this near a major historical support trendline, it often precedes a violent expansion. I also want to highlight the Heikin Ashi RSI, which is the indicator at the bottom of the chart. Look at those white circles I marked. Every time this indicator hit extreme oversold levels and started curling up, we saw massive price appreciation. We are currently in that extreme oversold territory, and it is just starting to curl upward. It is the same setup that gave us the rally earlier this year and 2 previous times. For the Fibonacci levels, I'm anchoring from the January high of $5.40 down to the recent November low of $1.30. The key levels to watch on the way up are the 236 at $2.30 and the 382 at $2.90. These align perfectly with previous resistance zones. Now, here's my personal strategy. I'm not telling you to do this, but this is how I'm playing it. I view the zone between $1.40 and $1.90 as a prime load zone. We are essentially buying support. This green box on my chart represents that area. However, we must have an invalidation point. My stop loss is set strictly at $1.15. If we get a weekly candle close below it, this bullish structure is broken. It would mean we lost the long-term trend line. In that case, I would be out of my short-term position and would look to reaccumulate much lower, perhaps around 80 cents. This protects my capital. But if this support holds, my targets are clear. I'll be scaling out using a trailing stop approach. My first take profit target is $2.30. If we hit that, I move my stop loss to my entry. My second target is the top of the channel around $3. If we clear that, we are in price discovery mode towards $4, $5.50, and eventually $8. So here is the synthesis. We have institutional floodgates opening with ETFs, massive stablecoin inflows signaling demand, and a technical chart that is testing a 2-year support trendline. The risk-to-reward ratio here is skewed heavily in favor of the bulls. We are risking a drop to $1.15, which is about a 20 to 30% downside from here, for a potential upside of 300 to 400% if we hit those upper targets of $5 or $8. Short term, I expect some chop. We might even wick down to scare the weak hands. But as long as we close the weeks above that ascending trend line, the thesis remains valid. If the market gives us a deeper correction, I'm not panicking. I'm watching that $1.15 level like a hawk. But if the ETF narrative catches fire, we could leave this zone very quickly. Bottom line, SWI is building a massive base of support backed by real institutional utility and flow. The chart suggests we are at the end of a consolidation phase, not the beginning of a crash. The best trades are often the hardest ones to take when the chart looks boring. I'm betting on the data, not the hype. If you enjoyed this breakdown, make sure you smash the like button and subscribe. I'm posting daily updates in my free Telegram community. The link is in the pinned comment, where I discuss these setups in real time. I recently covered a similar setup on Near Protocol. Check out that video on the screen right now if you want to compare the structures. Stay safe, never financial advice, and I'll see you in the next one.